Hi everybody, welcome to Trading Conversations. You are here, my friend, because you believe that trading can be one of the most efficient ways to attain financial freedom and can be achieved as long as you are willing to put in the hard work to develop your trading competency. Our goal with this show is to introduce you to the traders who have dug through the trenches and emerged at the other end. From the sharing of their trading stories, strategies, workflow, and best practices, I hope to help you shorten your learning curve as you embark on your journey towards trading mastery. Today's guest is a professional stock and options trader, author, and performance architect. A self-made millionaire by the age of 30, this trader focuses predominantly on day trading with a specialization in gaps. At the same time, he also uses candlestick analysis to read the sentiments of the other market participants trading in similar positions. If you have always been interested in the world of day trading, especially with the use of candlestick charts, you definitely need to hang around for this upcoming interview. With that, please join me to welcome Jerremy Alexander Newsome, the founder of Real Life Trading. Hey Jerremy, thanks for joining me in this episode of Trading Conversations.
My man, it's a pleasure and an honor to be here. Thank you so much for the opportunity.
Fantastic. Let's get straight down to how you started your trading journey. Can you still recall how it all started for you in the financial markets? When was that first occasion that you were introduced to trading?
I can actually. So it was really, I have a cool story. In essence, it started when I was 6. So Philip, have you seen the movie Forrest Gump?
Yes.
Okay. So about like 75% of the way through the movie, Forrest Gump starts recounting his life. And he said that Lieutenant Dan invested in a fruit company and they didn't have to worry about money anymore. So I had never heard the phrase, we didn't have to worry about money anymore. I grew up really poor financially and I had a great childhood. I was just poor. So I had never heard that phrase. And I asked my dad, what is investing and what is the fruit company? So he told me about Apple computers. This is back in 1994. And I more or less begged him. I was like, listen, you got to invest in Apple. You have to do what Forrest Gump did. And eventually I convinced him to make that happen. We didn't have tons of money. So I went out and picked blackberries off of the bush and sold them door to door. And I actually ended up making like $1,500 that summer. And we bought some shares of Apple back in 1994. And so that was kind of like my first plunge into the market.
I see. And I suppose then, therefore, you actually started off as an investor in the stock market. And
exactly.
How did that point evolve for you from then onwards?
So what happened is if I still had those exact same shares that we bought, I think they'd be worth somewhere around 34 million right now. But I ended up selling those shares in 2000 at the top of the tech bubble. So we got lucky in that regard because we moved from one state to another state. And as a 12-year-old, my dad gave me $12,000. So that was how much my money turned into. And he was like, this is the greatest trade you're ever going to do. Congratulations. So when I got that $12,000 as a 12-year-old, I was hooked. That was it. That's all I wanted to do. And I went to university down in Florida. It's called the University of Florida. And I went there to try to learn about the stock market. I got a finance degree. So I thought a finance degree, Philip, would teach. I thought that's what you learned, how to trade the stock market, how options work, how day trading works. And, me and you both know that wasn't really the case. So really what happened from there is I started learning a little bit about the markets at a company that I worked at. In the States, we have something called a 401k, which is like a retirement vehicle.
Yep.
And I worked at a company called Nationwide Insurance. I was a car insurance guy. And I had $10,000 in my 401k at the time and eventually bought shares of silver. The company is still around, First Majestic Silver, ticker symbol AG. And at the time, I think it was trading around $12 a share. So I bought like 900 shares and it went up $4 or $5 and I sold them and made like $2,700 in the course of 2 or 3 weeks. But what was mind-boggling about that, that's when I was early 20s, is no one had ever told me, no one ever told me that I could make more money trading the stock market than I could at work. Because that's about how much I made at work in a month was like $2,700 US. And I'm just made that trading, and that changed my life forever. That was that one moment, seeing that green P&L, my 401k, $2,700, that changed everything for me.
So on the hindsight, does that look like a lucky trade to you?
You know, kind of was. Even on a technical basis, I've gone back and actually looked at it. It was a really clean breakout. It was a nice, easy trade. It actually ended up going up to like 24 and some change. So I did sell a little early, but it was a lucky trade. The biggest question I get about that trade, Philip, is people say, how'd you find that company?
Oh.
The answer is I went to Google and I typed in silver stocks to buy. And it was the first one that came up because it's First Majestic Silver and the ticker is AG. So just SEO. It's the first one that came up in Google. And that was literally all I did. That was my whole research.
Oh, so at that point in time, you actually already apply some kind of a strategy or methodology to how you actually pick the stocks.
Yeah, it was a bad methodology. It was just search on Google, and whatever came up first, that was what I bought. So
I see.
Yeah, pretty bad methodology.
And how old were you at that point in time?
I was 20. So this was 12 years ago.
I see. Oh, 12 years ago. And how did things evolve for you from that point onwards? Do you like dive deeper into studying what trading is about? I mean, considering that your college didn't really prepare you for what the real reality of financial markets trading, despite you taking up a financial course.
Exactly. That's when I started really diving into it, because once I did that trade and I made that $2,700 and my 401k went up from like 10,000 to almost 13,000, I bought every book I could. I went to the University of Florida, went to one of their libraries. I went online. I went on websites. I went on Google. I typed in how to trade stocks, how to invest in stocks. I mean, I didn't really even know what to search for. Like, I was just going into Google and just asking any stupid question I possibly could. And so 12 years ago, you're not looking at a massive, massive amount of people that were actually out there teaching this stuff. And there was no one doing it for free. So I did definitely drop some serious coins on using my credit card on buying courses. I mean, I went through every course imaginable, man. Online and in person. Like in Florida, there are tons and tons of programs that actually have where you have a speaker and you're sitting down and you're taking notes. I went to all of them, every single one of them. I mean, every company that was around or still is around, I probably bought one of their courses at one point.
I see. And what kind of trader were you at that point in time? Were you like more like a longer term swing trader? Because I understand that you actually evolved into a day trader now. And how did that happen? I mean, there must be something that you went through that helps you discover what your true calling is in trading.
Man, it's a long story, man, but I'll give you as much as I can, as quick as I can. So bottom line, I start out with one strategy that I understood, and it's still my favorite strategy to date. It's called the covered call process. The covered call. That's the strategy. And that's simply where you buy shares and you sell a call higher than where you bought the shares. And if you get called away, you make money. And if you don't, you still keep the rent money, the call sale premium. You still keep that, which is generally a few $100 a month. It's not that much, but it can be. And you slowly start just being patient. So yeah, it's more of a swing trade, position trade. You're not really day trading. And I actually did kind of well with that strategy for the first 3 or 4 months. But what I learned, Philip, was I was like, okay, if you can sell options and make money, doing covered calls, what happens if you buy the option? And I started learning. I had a course that I took online that taught me about buying weekly options. They didn't talk anything about risk. I'm not saying this is their fault. This is 100% my responsibility, but I just didn't understand the risk concepts of weekly options. I didn't really think through it. So I ended up borrowing my dad's retirement money and trading it and using weekly options. I started doing covered calls, and we did very well for the first 3 or 4 months. Just buying, it was $103,816. That's how much he gave me. I started taking all that money and just buying it at stock index. So at the time, I think it was TNA. It was one just like the 3X, 2X market index funds. Taking the whole 100,000, buying shares, turning around, selling some covered calls 3 or 4 strikes away, and just repeating that process over and over and over. Worked very well. I made 36 grand, I think, in the first 3 months off of a $100,000 account. So 36% growth, give or take, in 3 months, and did really well. Was very happy. And then, like a lot of newer traders, man, I just totally pivoted. I was like, I need to do more. This is great, but I could do better. I'm smart. I'm great. I'm all this. And man,
I need more capital.
dude. So I did the journey that most people do, where I actually ended up losing the entire account. I blew it all out. I lost every single dime.
Wow.
Because I was buying weekly options. I was holding them till expiration. I had fear. I had panic. I mean, I had everything, every emotion you could possibly imagine. And I just didn't understand the risk. I didn't know anything. So I lost all of my dad's money. And man, it was like, I was pure failure, dude, pure 100%. Like I failed so badly, miserably in front of my whole family. And I was the golden child, right? I was the youngest. I was the one that everyone was like, this guy's going to be successful. One of the few who went to college, you know, blah, 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 lost all of it and had to find out a way to battle back. And so through that, that's when I started understanding day trading, because with day trading, you can trade smaller amounts of money a little bit more aggressively and kind of grow it faster. And it's a sad story, but my dad had a limited time. So I knew after I lost the money that he only had 3 or 4 years to live. So it was really like crunch time. So I kind of had to start day trading to make that money back as quick as I could, go get more capital, go get more money, credit cards, cash advances, loaned out my 401k, everything you shouldn't do, I did it.
Wow. Wow. And did it even ever occur to you that, hey, maybe just this thing is just not for me, and let's just go and find a decent work to do and earn back all of this money to find that? Did it ever occur to you, or it was like a very straightforward decision that, hey, I lost everything, but I'm gonna make everything back from trading all over again? Is that what you went through in your mind?
That's a really good question, man. I think the answer is yes. Like well, no, really, it never occurred to me that I should just stop doing this. That never even popped in my mind, because I've always loved this. I've always actually understood stocks. I mean, to a pretty basic level. If you have a really good company and a really good product and they sell a lot of that product, their stock is going to go up. Like that's kind of the stock market. I mean, from basic principles. And in my opinion, I thought to myself, well, I understand this. I get it. I know I love it. I'm so intrigued by this. There's no way I can do anything else. And I had a job. Like, I mean, I had a 401k, company car, you know, I was wearing a suit, like the whole thing. And I don't know, man. I wasn't happy. I wasn't fulfilled. It seemed too easy. It seems like that's what everyone else did. And I've never in my entire life been told, oh man, you're like everyone else. Like I've always been told, you're weird, you're eccentric, you're a little crazy, a little strange. And that just always has lived with me. I'm like, well, if I'm strange, eccentric, and weird and crazy, I need to be doing something different than everyone else is doing.
I see. And so your day trading foray actually started from the biggest war scar that you have actually suffered. Yeah. And so you decided to go into day trading. And you, how was your relationship with your family? Were they supportive of you doing day trading again after losing that much of money, or you just simply did it because you had to and you didn't really care about how they feel about it?
It was definitely this. It was more of the second one. I think at that point, man, I was like, there's very few times where people go, yeah, I actually totally 100% failed. Most people lose. Losing and failing is two different things. Losing is like, hey, you went to the job interview and didn't get the job. Right? That's losing. Failing is like, no, man, you went to try to get the job interview, didn't get the job, so you created your own company and lost all of your money. Like that's kind of like, that was failure. Like I was at rock bottom. So I didn't really care my family thought. They all knew that I lost the money, and everyone's like making fun of me. And I was like, well, that's cool, but I know how this process works. I get it. I'm going to make it back. There's no question. And it just became a pure, unadulterated battle in my mind from there on out. And the day trading thing, I stuck with actually day trading weekly options. That was kind of how I got it back, because I did understand at that time options, risk, how they move. I mean, you can make 10% return like in a second, you know, on an option trade. So I would really practice the patterns, and I would kind of know a little bit about when to shove some size into it, when to withdraw some size, when to be a little bit more aggressive. And through that process, that 3 years, man, I even borrowed like $12,000 from a very unreputable source, like paper bag money. in
Wow.
order to trade weekly options.
Okay.
And I finally made that 100,000 back over the course of 3 years.
Over the course of 3 years, by just diving deep into this every single day and doing it?
Yeah. Yeah. So one of the regiments that I started was I would back trade 7 hours a day. So back trading is where you go back in time and you just play the candle by candle. So I would go back to a 5-minute chart and watch every 5-minute candle and say, what would I do here? Why, where, when? And I would go back and do a 1-minute candle, then a 2-minute candle, then a 3-minute candle. I would just keep doing that over and over, 7 hours a day, every single day for 7 months. My birthday, your birthday, Jesus' birthday. Like I was doing it every single second. I wasn't doing anything extracurricular, right? I didn't go to clubs. I didn't talk to ladies. I didn't go out. I didn't do anything. I just did this every day for 7 hours a day.
I see. And you were day trading options at that point in time.
Yeah.
So can you share with us a little bit more? Why do you decide to day trade options instead of just the equities?
So I did move. That's a very good question. I did end up moving into equities because I did find it a little bit, it is easier. Day trading equities is so much easier than options. For me, it was a mindset of it's just a leverage where if you have a day trading account that's cash and it's under 25,000, which mine was at the time, you can trade until that cash is gone, and then you have to wait for it to settle. So if you're using a margin account and you're trading stocks, you have to have more than $25,000 a day trade. With options, you don't. So if, for a long period of time, I was trading somewhere in the range of $8,000 to $20,000 of cash, because what I would do, Philip, is I would make 5 or 6, pull it out, put it away. Make 5 or 6, pull it out, put it away. Make 5 or 6, pull it out, put it away, and just kept doing that over and over. So I never really had that much capital in that particular day trading options account. And what I would do is, as I was pull the money out and kind of reward myself and just like put it into like a savings account or whatever, it was never over that amount. But the cash you only need on options, like I was trading Apple very, very frequently. Amazon back then was a lot cheaper. It was like $200 a share. So I was trading Amazon. Netflix was a lot cheaper back then. Facebook was not even around. Micron, AMD. So I was trading really, really liquid, tight stocks, and it only cost $3,000 or $4,000 a trade. So I didn't actually need that much capital. And as I grew that account and I started learning about what's called prop trading. So proprietary trading is pretty much where you can buy into a funded account, take your money, and then people will leverage that money. Once I learned about that, that's when I took some of my savings over here, and I bought into with like $10,000, and I got $100,000 of actual day trading buying power, and started doing that route. So then I just did both. I did equities and then I did options, and so it slowly started building.
I see. So many of our audiences are actually very interested about starting day trading, and I suppose that is actually very common among new traders. So yeah. I want to dive deep a little bit more about that 3 years that you were really, you just actually came out of a war scar and trying to build your way into recuperating back this entire capital base that you lost from your father's account. So in that 3 years, can you share what were your main learnings? What were the main mistakes that you made? And what do you think was the differentiating factor that allows you to start from a loser to being able to recoup everything back in just 3 years?
Great question. So 3 years sounds like a short period of time, but I mean, it's a long time. So, I mean, now at this point we're talking, I'm 24 and a half, 25. I mean, that's only 7 years ago. Like that wasn't that, like 3 years sounds short, but it's a long time. So step one, don't try to do it by next Tuesday. The thing is, a lot of traders will go, oh, I lost some money, let me make it back immediately. It's like, no, man, the math not on your side. Like if you take an account at let's say it's $100,000 for simple math, and you lose 50% of that account. Okay, now you're at 50 grand. A lot of people go, well, I just have to do the exact same thing to get back. It's like, no, my friend, if you make 50%, which is exactly how much you lost, if you take a $50,000 account, you make 50%, you're at now 75,000. So you're still down 25,000, even though you did mathematically the exact same thing to lose the money. So step one was taking it slow, and I knew that, and I realized I couldn't put my foot too heavy on the gas pedal. And there were times where I did. So that what I would say is step two is you do have to know when to go big, and you also have to know when to manage your risk extremely small. So when I would say go big, I would put in most of my account. So we're talking $16,000, $17,000 onto one options trade, but my loss would never be more than 10%, ever. So I'd take that trade, I would set it up, I would get in, and I would just hover over the sell button. So if it popped down 10%, I would just get out. And so I'd lose $1,600, $1,700, $1,800. But if it worked, I would generally make 30, 40, 50% return on that option. I would just get out. And again, there's my 5,000 or 6,000. Boom, take it out, put it into the savings account.
I see. So did you ever thought about like compounding the returns and the profits that you made instead of putting into account? What was the rationale of trying to take things out and put it into a separate account and just continue to trade that same amount of capital?
Great question. So the compounding thing, I mean, a lot of people ask me that. The reason I didn't do it is because I knew I was playing from behind. So it's kind of like if you're playing poker or anything else, like if you're playing from behind, it's like you need to start collecting and protecting. And if you're playing from behind, you got to start stacking chips, and it gives you confidence, because what I see far too often, and this would be probably tip number 3, Phil, what I see far too often, man, is people will start trading, they will lose. And again, let's just go with the number of 100,000. You start with 100,000, you go down to 75. You're like, oh, I'm down 25,000. I'm an idiot. And then you take 75 and you go to 85. Okay. Well, you're up 10 grand. How about you pull out 6,000 and do something with it? Make it real. Like buy a new refrigerator, or improve your kitchen, or buy some cabinets, or redo your flooring, or take a trip to Bali or Aruba or whatever. Put money into your world to make you happy. And so if you take 6,000 from 85, right now you're back at 79, you're still higher than where you were. And you have the positive linked to your brain that trading is good and I can make money with it. So now don't go lower than 75, then take 79, go back up to 86, pull another 3,000 out, reward yourself, and then just keep doing that over and over until you get back up to 100. And I see a lot of traders, man, they will, bottom line, they'll lose a little bit. And they'll work really hard, they'll make it, but they just won't make it back exactly to where they were yet. But they're spending 3 or 4 months of hard labor to make $10,000 or whatever, and they never reward themselves. It's like, well, it doesn't work that way. Like, you have to link positive thoughts and emotions and feelings to money and to hard work and to success and to following your plan in your brain. And why do we trade the stock market, Philip? To make money. So pull the money out and reward yourself. That was kind of like what normally just happened on accident, but that was really what I needed to do, and that's what occurred.
I see. So were you a full-time trader at that point in time already during that 3 years?
No. So I was not a full-time trader. I still had a job. When I say job, like I still had a job that I retired from Nationwide at 24. So I say retired because I still went to somewhere else, but I did get a pension. It was like $7,000 or something, but I did get a pension. I did retire, whatever. I left that job. And then I worked for in a sales position at another firm for 2 years. And that just simply allowed me to be a little bit more flexible with my trading, because I said, hey guys, I will sell for you, but I want to be able to come in whenever I want.
Oh, I see.
So you can't give me a schedule. I started just throwing out my resume, and finding positions that it would be a lot more flexible. So I did sales, and I'm pretty good at sales. So I did sales for a while. Did that, and then while I was doing the sales part, Philip, I was also trading. So the full-time commitment into trading didn't come until I was 26. And so that was 6 years after my real foray into this whole process.
Wow. So you only stopped that sales job 6 years on. Is that what you mean?
So Nationwide was from 18 to 24. So I started trading 4 years, and then 24 to 26, 2 years at the sales job. So I was trading a lot. So when people say full-time trader, it's like, I don't ever want anyone to just have one stream of income. Like that's just not wise. It doesn't even matter what your income stream is. So if you trade for a living and you make $100,000 a month, awesome. But you should still do something else with your money, right? Do rental property, buy commercial real estate, buy digital real estate. Do something with your money. You have to have other streams of income because it reduces your stress level.
Exactly.
If anything, that's what it does. It reduces your stress level. So I did have a job from 24 to 26. I was working and I was also trading. So I had 2 streams of income during that time in my life.
I see. So this is going to inspire a lot of aspiring day traders out there, because many of them are very concerned that, hey, I got to work a day job and stuff like that. But I think it would I would suppose that it works only if you have a flexible day job, right? Otherwise, it's going to be really tough to do day trading while having a fixed timeline kind of job at the same time.
My friend, you're so right about that. And I love, so you mentioned earlier, Mike, when you were kind of introducing me, one of my titles is a performance architect. So really what that means is I help people perform better at whatever they're trying to do. So if someone is trying to day trade for a living, but they also have a job, it's like, well, man, here's a cool secret. Become better at your job also, make more money and work less and day trade more. And people are like, well, that's impossible. I'm like, no, it's not. Figure out ways to become more valuable at work, figure out ways to reduce your time, stretch, ask for a really, really huge promotion. Maybe you'll get it. So you're making more money over here and more money over here. Even if people are like, well, dude, I hate my job. It's a dead end thing. It's like, well, good. Then ask for a really big raise. So if you get fired, you don't care. Right? Because you don't want to work there anyway. So you got to get out of your comfort zone. You have to leap, right? The phrase is, one of the quotes is, what if I jump and I fall? It's like, you might fall, but what if you fly? So at some point you do have to go, yep, this job is really, really cool, but I've got to do what makes me happy. I'm going to do this. But before you do that commitment, start building the foundation, start building your money over here, because it's just easier mentally to do that.
I see. So during that 3 years that you were actually earning back all those money that you lost, was it very different the way you trade at the start of the 3 years versus 3 years later?
Ooh, man, what a great question, my friend. Ironically, not really. I've actually, gosh, I'm boring. Man, I'm so boring. Like, I already know what I'm doing tomorrow. I already know exactly what I'm looking for. I keep the exact same very rigid mentality. There was a point in time during those 3 years where I only traded Apple for 2 of those years. So I traded Apple and nothing but Apple and only Apple. That's all I did. So when I woke up, Apple. Monday, Apple. Friday, Apple. So it makes the watch list a lot easier. You don't have to spend nearly as much time, and you start learning the personality of a company. And I would argue I'm one of the best Apple traders in the world, because I've spent over 10,000 hours just trading Apple, no question. And as you're looking through other procedures and approaches, the way I trade Apple, very similar to the way I trade like Square and Roku recently. So I know it's all about having a very methodical, simplistic, easy to follow plan. And I really don't deviate from that very much at all.
I see. So is the way that you trade during that 3 years still pretty much similar to the way that you are trading today right now?
Yeah, very, very similar. Yeah.
Wow, fantastic. So I definitely want to get into more details about the way that you are handling your trading right now. So for those of you watching this interview right now, before I move on to pose more questions to Jerremy with regards to his trading workflow strategies and all those experiences, I'd like to take a moment to let you know that Jerremy has kindly prepared a self-study trading class that you can sign up and attend for free. All right, so Jerremy, can you briefly share with us what this trading class is about and how is your class going to be beneficial to our audiences?
Yeah, man, I appreciate you asking. The initial reason why I built it is because when I started studying, there was no information that was totally free with no sales pitch. It was actually really good. So I was like, what if I built one of those so that people could find out, do they actually want to do this at all? Because in that course, I really outlined the real life perspectives and objectives and pros and cons, because there are cons to trading. Right? Yeah, I love trading, guys. I'm one of the biggest proponents in the world for doing this, but there's some cons, okay? There's some pros, there's some negatives. And I want people to know what those are. I want them to know what investing is, because a lot of day traders, Philip, they just day trade. I'm also an investor. So I own shares of companies long-term, because that's how you make money while you sleep, right? Day trading, you actually have to work. So this course, this really, really wonderful, well laid out, easy to follow course, kind of gives people a basic strategy to follow. And it also gives you some rules to follow, and it shows you how to follow them, and talks about order entries, stop losses, risk mitigation. It's a really, really good basic foundation for what someone might want to learn if they potentially want to do this, is either as a side hustle, a career, or like a full on just hobby.
Fantastic, fantastic. You know what, Jeremy? I always believe that learning from other people's experience and especially established traders' war scar and experience is definitely one of the best strategies for a new trader to shorten his learning curve. So I'm sure your trading class is going to be helpful for many of the aspiring day traders out there. Now, for you guys watching this interview right now, be sure to click on the link provided below this interview video to sign up for Jeremy's free trading class. All right, so Jeremy, back to more questions on your trading strategy, workflow, and best practices, shall we?
Absolutely, man. Let's do it.
All right. So, can you briefly share with us? Let's jump to this at this very point in time right now. Can you share a little bit about the general methodology of your day trading strategy? How does it work?
So, really, what I do is I look for overnight gaps. So, a gap is a change in price from the close of the market previous to today's open. And specifically, I really like to focus on gaps above the previous high of the day or gaps below the previous low of the day. So as an example, let's say Apple on April 13th, which this is a real trade, by the way. So April 13th, the high of that day was 273.70. Now, April 13th, the next day is April 14th. So the next day, we open at 280, right? So previous close is 273. Now we're opening at 280. So that to me says I'm looking at playing this trade and I'm going to be watching for this particular stock for sure. So I'm now going to focus on this company and I'm going to look at very basic support and resistance levels. I'm going to determine what type of gap it is, meaning do I think people are going to sell the gap or do I think people are going to buy the gap? And that'll help me with my timing. And based on the trend, now this is a really easy thing to consider. When I say the trend, I mean literally, is it going up or going down? If it's going sideways, I'm just not going to trade it. If it's clearly going up or clearly going down, I'm going to go with the trend. So
I see. So can I just clarify a bit of that on that? So does that mean that you will only start considering taking on a trade only when you see there's a gap?
Correct.
If you don't see any gap happening, you will just leave it aside. You just don't bother about it.
Bingo. And the cool news is, man, you'll get gaps pretty frequently, honestly, especially if you're following like 5 companies. So right now, I follow AMD, Tesla, Roku, Square, and Baba. And today was an extremely good day for anyone who traded Square or Roku. Both of them had phenomenal gaps, perfect setups. I mean, a blind one-legged tortoise could have made money trading those stocks today. So I do look for stocks that are gapping. And if it's not gapping, you're right, man. I just don't trade it, which there are plenty of days where I don't take a trade at all. Absolutely.
And does that mean that usually you take the trade in the direction of the gap itself?
Very frequently. Yes, very frequently. When you don't, it's called a fade, F-A-D-E. And I do tell people, and this is a very weird coincidence. I don't know why, but women are very good at fading stocks. Don't know why, but they are. It's an incredible, very interesting statistic. But my lady traders, they almost always do fades. So if you're watching this and you're a lady, look for fades. For some reason, you guys do great at those. But fades for me, they're a little bit more of an advanced type of method because you have to be able to feel what people are thinking. And that's why ladies are so good at it, because they're very intuitive, very emotional creatures, and they're gorgeous, and they just understand why people are doing something. So if you're looking at a chart, fading is just a very intuitional, very feel-based type of play. Usually it's easier just to go with the trend and don't try to play the opposite direction.
I see. Wow, that's really interesting. What if the gap was really huge? Does that actually affect any of your judgment at all?
Oof, man, that's a good question. Dude, yeah. So there was a really great example today. It was Twilio, Twlo. And Twilio was a massive, massive gap. What was interesting about this particular gap, I think right now, closing of the market was up like 40%. So it was opening up 20%. There's 2 things that will happen for large gaps. Number 1, I just won't trade them if it's too big. So usually over 20%, that's where I don't know what this is going to do. Are people going to sell it because they're very profitable, or is everyone going to get squeezed out because they're in shorts and it's going to go higher? So over 20%, I'm not the greatest trader in the world at that range. I know some people are very, very good at 20% higher moves. I'm not the greatest at that. However, if the location is really good and the short float is high, so the short float means how many people are betting against the stock. If you have a high short float and the open of the gap is clearing many months in a row, beautiful. So Twilio, for those of you who are interested in watching this video, go back to May 7th, 2020 and look at that gap on Twilio. Again, it opened up 20% and ran another 20% higher. So that's a phenomenal, phenomenal move. There was another one, Fastly, FSLY, if you want to go back to May 7th, 2020. Fastly gapped over, Philip, like 7 months of range. So when I say 7 months of range, the last 7 months, we gapped above the high of every single day in the last 7 months. And when you gap above tons and tons and tons of people who are trying to pick a direction and they're just wrong, you're going to get a great, great short squeeze, a great mover, and both of those had phenomenal gaps. So those are two that I did not trade today on May the 7th because, as you mentioned earlier, I only focused on 5. But someone out there made a lot of money on those, and those are gaps that can be played if you understand the sentiment behind them.
I see. So once you get into a trade, typically how long do you actually hold a trade? Is it based on a time-based kind of exit, or is it based on a certain risk-reward profile that you're looking at?
Man, that's a really good question. Generally both, actually. And what I mean by both is most of my trades I would like to do and finish in 3 hours. So I would say 85% of my trades I'm done in the first 3 hours of the day. So I get up, it doesn't matter when I get up, but I start really hitting it hard at about 9 a.m. Eastern. So 9 a.m. Eastern until about noon, that's 3 hours. That's generally when I'm done for the day. Now, let's say I have something going on, or I'm working in the morning, or I have another project. I do a lot of real estate and business consulting as well. So let's say that I'm not trading that morning. Then I will trade from 12 to 3. So that 3 hours. And I never take a trade after 3 p.m. Eastern. Never. It's just one of my rules. I never get into a new trade after 3 p.m. Eastern. If I'm not already in, I just don't trade that day, which is fine. So for me, to really answer your question, generally 3 hours is how long I'm going to trade. Secondly, I absolutely will trail my stop if it just keeps working and doesn't really show any signs of reversing, like Roku today on May the 7th. And you'll just trail your stop slowly and try to stay in as long as you possibly can to have a big winner. When those happen, those can be really, really good days. And if I am not doing well after being in a trade for 2 hours, so when I say doing well, if I'm not up a certain percent and I've been in the trade for 2 hours and I haven't hit any of my targets, but I'm profitable, then I'll just exit and be done for the day. So I usually do have like a 2 hour kind of hard fast. If I'm barely winning, I've been in the trade for 2 hours, nothing great is happening, then I'll just get out.
I see. So that's how you actually compartmentalize your time to make sure that you don't spend your entire day in front of the screen.
My man, you got it. It's all about time management. And time management is such a key aspect to trading because, number one, you do not want to spend all your day in front of the computer. 3 to 4 hours should be max. So when people are like, I want to trade full time, they're thinking they're going to be 9-10 hours a day. It's like, no, you're not. Like 4 or 5 hours should be plenty. And then from there, go do other things. Like, what are those other things? You need to figure that out. You need to, is it business? Is it consulting of some kind? Maybe you create a company that you launch or create or build, or maybe sell stuff on eBay. Who knows? Do something.
Exactly. So what kind of time frame candles do you actually use? Do you look at like minute chart or even like to the tick charts?
Great question. I do ticks only when I trade futures. And I've only been trading futures for 2 years. So I won't really dive massively into futures in this conversation. But I do not trade 1 minute charts. I'm not the best in the world at that. I know many traders who are much, much better than I am on the 1 minute chart. And it's not me. So I do 2 minutes, 3 minutes, and 5 minutes. That's my bread and butter. That's really where I focus all my time and attention on. I will look at the 15-minute chart later in the day. So if I need to just kind of generally see, and I tell people all the time, look through any time frame you want, whatever makes you happy. If I'm in a trade and it's like kind of doing okay, I'll go into the 15-minute, the 30-minute, the hour, the daily. I'll look at every minute, every time frame just to see what it's doing. But generally, Philip, 2 and 3 are, for the first hour, it's really what I focus on. And the 5, I'll start implementing the 5 after the first hour, and then I'll review the 15 after 2 or 3 hours of market open.
I see. So how do you go about managing the risk? What's your risk management methodology like? Just briefly share with us.
My man, I'm so thankful you asked that, because I'm actually going to give an answer. I've been to so many of these interviews, and people don't actually tell you. They're like, oh, I just kind of feel it out. Here's how I do it. Again, is this the right or the wrong way? I don't know. But, I make really good money doing this. So I base it on what's called a risk unit. A risk unit is an amount of money that I'm totally okay losing on any given trade. And that risk unit is a predefined, constant amount of money over a period of time. So for example, let's say a period of time for like a year. I will keep a consistent risk variable where I go, this is exactly how much I want to make. This is exactly how much I want to lose. For very beginning traders, I suggest a smaller percentage of your portfolio. Here's an example. If you have a $30,000 account, I would suggest the most that you'd want to consider starting off with is a 1% risk of your portfolio, which would be, if you have 30,000, that's $300. And that should be the most if you're starting out as a trader. You can do 100, you can do 50, you can do 20, it's up to you, but keep it the exact same. Now, the way the math is formulated, Philip, is you take the entry and your stop loss. Doesn't matter if you're bullish or bearish, numbers work the same. Take your entry and your stop, do the math. So if your entry is 130 and your stop loss is 128, that's a bullish position, you're risking $2, right? If you have a $30,000 account and you're risking 1% of your capital, you're risking $300 per trade. 300 divided by 2. So again, where do we get the 2? That's 130 minus 128. 300 divided by 2 equals 150 shares. Now, most people on a position will take 100 shares or 200 shares. And what's interesting about that is the 100 shares is actually not enough risk. And then the 200 shares is too much risk. But you should really be doing 150 shares if you have a $300 risk unit. And what that does is it mathematically gives you something that people love, which is certainty. So as a trader, you now have an exact scientific mathematical approach for exactly how much money you're going to lose. And it helps you breathe and calm down, because what if you're taking a trade, you're buying 1,000 shares, but it's a $7 stock? Okay, 1,000 shares on a $7 stock and 1,000 shares on Amazon, those are two totally different trades, right? So you want to be able to calculate your risk and know precisely how much money you're going to risk on any given trade.
I see. So in essence, what it means is that if, let's say, you get into a trade and if this trade doesn't work out, you should only technically lose only that 1% of your entire capital base, right?
Bingo. And so let me ask you this question, Philip. If you initially are going to start with that 1%, do you think that you could lose less than that as the trade progresses?
If you are using a trailing stop, obviously, then you will lower that potential loss as time as it goes in your direction, right?
There you go, my friend. And that's the key to making money in trading, is losing that, keeping your risk constant, and then losing less. So on average, my average loss is 0.7 risk units. So 0.7 Rs, 0.7 risk units, 0.7%.
I see.
That's my average loss. Really, as of 2020 this year, it's right now 0.67% is my average loss. My average win is 1.42.
So it's about two times your average risk that you are taking.
Exactly. So 1.42 is my average win. And if you take that over the course of generally 50 trades, 50 trades a month is pretty average for me. So 2 to 3 trades a day, you come up with approximately 7.5%, 8% risk units, which is amazing. I mean, that can be life-changing money for a lot of people. It doesn't really matter your risk size. I mean, if you have a $30,000 account and you're making 8% a month, off of, you're making $2,400. I mean, that's a mortgage payment for like so many people in the world, and that's phenomenal.
And does it make sense? I mean, so the thing about day trading, about the way, because the stop loss is so near to the entry, usually it will mean that your size is going to turn out really big. Does that affect your strategy or your emotions in any way?
No, it does not. That's a great question. It shouldn't, because now that you all know the risk parameters, you can risk the exact same amount of money on every trade regardless of how many share sizes you're buying. So for example, if you're taking a trade on Roku, you might buy 100 shares, but if you're taking a trade on AMD, you might trade 2,000 shares. But the risk is going to be the exact same regardless of what you're buying or how many shares it is. So for example, you can do a $1,000 risk with a 5-cent stop. Right. So you're going to be in a lot of shares, but it's like, well, I already know that I'm going to lose $1,000. So who cares how many shares I'm buying?
I see. So from the execution aspect of it, do you actually put in your stop loss and your trailing stop right into the system and just let it run on its own? Or do you have to manually look at the screen and decide, okay, this is the time I should get out, and you manually do that?
Solid question, man. This is a big one. A lot of people ask me this. I actually do have manual stops in place at all times because as a day trader, it's like, why not? Because you will lose, man. So again, losing and failing, two different things. You're going to lose a lot, okay? Tom Brady, who is a NFL quarterback here in the States for the New England Patriots, he's lost more Super Bowls than most teams have won or even made it to. So if you're going to make money, guess what, my friends? You're going to lose. There will absolutely be losses. Get ready for that. So you're going to have the losses. It's absolutely okay. It's part of the game. Don't care. What I like to do, Philip, is I like to imagine me handing money to one of my friends when I lose on a trade and going, hey, Philip, my man, dude, you beat me. Here's $1,000. Congrats. I'm really proud of you. You did better on that trade than I did. And that makes me feel better because I'm a generous person. I love giving money. I love helping other people. And it just makes me feel less stressed about losing. But I always have a hard stop. And generally I have what's called an OCO order. So when I'm getting into a trade, I'll have a stop and a target that's automatic. Therefore, if I get a phone call, business meeting, Zoom session, coaching session, if I'm working with another trader, if I'm doing whatever, I'm able to leave and that trade is just there, live, ready to go, don't care. Stop and target. If it hits, whatever, it does its thing. And I can go in every hour and just scroll it up in my charts, drag and move the targets and stops and everything is good.
I see. So if you could just recall, were there only any occasions that in any of the trades, you actually end up losing more than that 1% that you planned for? And what were the circumstances?
It was? Yeah, it's rare though. It's very rare. It's a term I refer to as slippage. So I'm trying to remember the company. It was like a year and a half ago. It was some random biotech that was gapping up and I tried to fade it, meaning I'm playing it down, and bro, it did not work. So I got in, I shorted it. It spiked down for a little bit, and I have my stop loss at a particular price, but the stop is a market stop. So when you're asking earlier, is my stop in place? Yep, it's a hard stop market in the system. And so it just popped really hard, and I didn't get out 35 cents higher than I expected to, and I lost 1.4 Rs. So it wasn't disastrous, it wasn't outrageous, but it kind of sucked. But it's still very reasonably within my realm of comfortability, and that will happen. So again, book that down, guaranteed. It's going to happen in your life as a trader. You'll lose 1.1, 1.2, 1.3, 1.4 because of slippage or some weird company. But generally, that's why I like to focus, Philip, on those really liquid Facebook, AMD, Roku, Square, because you're not going to get that slippage. It's just, you're out of the trade. You might lose an extra penny or two, but you're generally going to be okay.
So what you mean is that in that particular trade, you actually, after you got into that trade itself, it further gaps during the midst of the trading itself. Is that the reason why you're
kind of? It just, I was in short, and it just moved up so quickly that my stop loss was a market order, and so as people were buying it, the spread was quite large. So I didn't get, it wasn't a market order, so I got filled at a really high bid and just got taken out of the trade and lost more than I wanted to.
And if that's the case, that would usually means that that particular stock that you were trading was not really that liquid, right?
Yeah, that's pretty much what happened. It was not the most liquid trade. And that's the thing, is a lot of people will get caught up in, if you go to YouTube and you learn about day trading, one of the biggest things, man, is trading those really low float, low liquid stocks where it gaps up 6 or 7% and people just pile in. It's the problem is you could get really bad fills and you might not be able to exit or enter the way you want. It's just really not going to be that great. And by the time you're already in, it's probably going to be too late anyway. So I really just like focusing on the big names. And here's one reason why. I've met a lot of very wealthy investors and traders. I've never met I've never met a wealthy penny stock or very, very cheap stock trader. I'm not saying they don't exist. I've never personally like shaken one of their hands and going, oh, awesome, man. Let me see your bank account. And they pull up their bank account and go, oh, wow, awesome. You're wealthy. Very cool. But I know a lot of people do extremely, extremely well in real estate and stocks, the big boy things, right? Like if you want to make big boy money or big girl money, play where the big people play. And that's where these big name companies are. So saying that to say, I generally like to stay away from the low float, no name, low liquidity stocks. Yeah.
I see. Fantastic. And how do you generally decide on that stop loss point level? Is it based on a technical level that you look at?
Absolutely. It's almost always based on the candle, 99% of the time. So for me, like I mentioned, the 2-minute chart, one of my strategies that's really, really basic is of the 5 companies I just mentioned earlier in this recording, if the stock gaps above the previous high of the day, I will zoom into a 2-minute chart and I will wait for an indecision candle. So usually I call it a high wave candle or some type of hammer or a doji. And I wait two whole minutes, man, 120 seconds. Gotta wait 2 whole minutes. I wait for these candles. And when I see an indecision candle, I get in above the high. I put my stop below the low. And that's it.
I see.
That's all I do. And it works, just not all the time. But when it does work, it can work really well. And today, I mean, you could have made, again, a fortune on Square, Roku. They both worked out brilliantly. Again, May 7th, if you're listening to this recording, go back and look at Roku and Square if you can on the 2-minute chart. They gapped up, perfect indecision 2-minute candle. They gapped up above the high of the day brilliantly. And as I mentioned earlier, if it gaps above the high of the day, I can play it aggressively. First 2 minutes, indecision candle, entry above, stop below, poof. That was it.
I see. And you mentioned earlier on that you use more of a trailing stop. Is there any occasions where you actually have a profit target instead for exceeding a profitable trade?
Absolutely. No, I have both. So I'll have a trailing stop for sure, but the trailing stop is manual. So initially it's hard in, it's at a level, and I would physically like go in and just drag it on the chart. The target normally I have it set at 2 to 3% of my risk. And what I'll do is like, if it hits it, phenomenal. That's awesome. If it doesn't hit it, and let's say it misses by like a penny or something, which happens a lot, is I'll take that target and just drag it up a little bit more. Just like, I don't know, 10, 20 more cents. I'll just take it and just drag it up, and then I'll start moving my stop. So I'll play this game where I keep increasing my target and increasing my stop. But one rule, Philip, I'm always out by the end of the day.
I see. So
with day trades, always out.
That would mean that your profit target is really meant for those parabolic sudden up move that you might as well just take all of it when something extraordinary happens for you to realize it. Is that?
Agreed. Yeah, agreed. So you're precisely correct. So if I get something crazy happens and just flies up and hits my target, awesome. And it rarely happens. I'm here, like I mentioned earlier, I normally 1.4. Like that's my bread and butter, man. Like you can make a lot of money with 1.4s. So the chances that I hit 2 or 3% in a month, I have, almost without fail, 2 to 3 every month where I'll hit 2 to 3% on that one trade. And those are the ones that make your month. The rest is just like the singles, the doubles, and then I get a home run 2 or 3 times a month.
I see. So you mentioned that your payoff ratio is about 1:2. Then how about your win rate? What is the percentage like?
Great question. So this year, obvious reasons, has been a little bit extremely extraordinary. Up until 2020, my win rate was 47.3%. 2020 right now, my win rate is 51.9%. Only because my stops are a little bit larger because the ranges are so large. And I'm not really exiting that often because there's just so much wild volatility. You can be in a trade a little bit longer and you can start moving your stops and things like that. So I'm a little bit better, but career wise over the last 8 years, I'm 48 and some change %.
I see. So now that the daily volatility has actually increased so much, both on the upside and on the downside, has that made any changes to the way that you day trade those stocks right now?
Yeah, it does. I exit a lot later. I try to hold because you can get these random late in the day moves. And so I trail my stops very slowly. On a normal day, let's go back 2 years ago. I get in and I'm up 1.4, 1.5, 1.6 in like 9 minutes. I'm out. Exit, pull my target down, limit sell. I'm out of the trade. I'm done for the day. But now it's like, man, you could get a random 5, 6, 7% move for whatever reason. So I just kind of like, right now I'm a little bit more conservative with my stop movement, like trailing of the stops. I'm just slower.
Give it a bit more room.
Exactly. I give it a bit more room. I'm a little bit slower, and I kind of have some upper targets just in case they get hit. And so last month, I mean, again, March and April, both phenomenal months for day traders, but it is a little bit more volatile. And when you have volatile seasons, try to hold for more, ironically enough.
I see. That's a very good advice. So, Jerremy, can you share with us a little bit about, I believe that many aspiring day traders will be very keen to understand your daily workflow. Can you share with us roughly how is that workflow like? Like, for example, when you wake up, and how do you actually start to prepare yourself for the trading session ahead, and how did it end for you for the rest of the day?
Totally. Great question, because I live my life generally in 20-minute increments. So I have everything scheduled out 20 minutes at a time, and I'm pretty regimented because I travel the world. So I'll go everywhere and trade. Last year I went from Australia to Dubai, to Denver to Hawaii in the course of like 3 weeks. And all that traveling is like, those are all massively different time zones. So you have to really, really stay like, this is what I'm doing. This is when the market opens. This is what I do. So if I have to go to sleep at 7, I mean, in Hawaii, I got to go to sleep at 7 p.m. because I'm waking up at 2 a.m. Market opens at 2:30 or 3:30, depending on if it's daylight savings or not. So that's early, and it's a little bit of a challenge. But I live in central time zone in the U.S. So I live in Nashville, Tennessee. That's like my home base, at least for now. It'll probably be Vegas in the next few months. And then after that, I might live in Bali, Indonesia for a while. But right now, I wake up generally at 6:30. So nothing too crazy, nothing too early. And I'm vegan before noon. So that's kind of like my lifestyle is like, I'll eat all vegan before noon. So my breakfast is vegan, plant-based. I normally have like fruit smoothies, almonds, peanut butter, apples, bananas. And I normally have breakfast around 7. So nothing crazy. Like, so 6:30, I wake up, do a little bit of just a brief general stretch, a little bit of a workout, some showering, some journaling. The journaling has nothing to do with trading. It's just like, what do I want to accomplish for the day? Who am I grateful for? Who do I love? Who do I appreciate? And I always screw that up when I'm on vacation, dude. I'm just here to say, like, when I'm on vacation, the journaling goes out the window and I suck at it. And I'm bad at doing that on vacation. But when I'm not on vacation, I normally write down, who do I love? Who I appreciate? 7 o'clock, I eat breakfast. 7:20, I start looking at charts. So 7:20 to 7:40, I look at charts, 20 minutes, just to see, Philip, what's gapping above the high of the day or the low of the day. And again, I have 5 companies, so it doesn't take that much time. I just click. All right, awesome. 7:40 to 7:50, I normally look through my emails because I have a lot of clients that I work with just to see, is anyone's house burning down? Like, figuratively, right? Is there anything crazy that's going on? I need to make a 10-minute phone call. Is someone in a position that they shouldn't be in, or they're really excited about? Do I need to help them with anything before market open? And if not, then I have a day trading room where people will actually watch me trade. And that starts at 8 a.m. my time. So from 8 to 11 Central, which is 9 to 12 Eastern, I'm in the morning room, day trading. And then I'm not going to go through my entire schedule, but it's reading and then working out and then studying and then emails and reaching out to people in coaching sessions and webinars and consulting and phone calls. And so 20-minute increments, boom, 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 all the way to the afternoon. So the afternoon, this is where I get a lot of work done. 5 to 6 Eastern, 4 to 5 Central, I review tomorrow. So I look at all my charts, just every company out there, I just kind of breeze through it. So I have an afternoon swing trading room where it's recorded. I send it out every day and I review what gapped, what's moving, why is it? Because again, as I mentioned, I also swing trade and invest. So I'm looking at those companies. And I'm writing down my note, Philip, for, okay, if Square does this tomorrow, what will I do? If Roku does this tomorrow, what am I going to do? If Tesla, which I'm watching extremely closely tomorrow, if Tesla does this tomorrow, what am I doing? And I just kind of write those down. Got it. Perfect. And then most of the night is webinars, making classes, coaching sessions, phone calls, running, working out, exercising, doing something crazy. And then I'm really striving for 8:30 Central. That's when I'm done. So I normally work like 13 and a half, 14-hour days. And then by 8:30, I love watching movies, man. So I normally will find a good movie to watch, and me and my girl watch a movie or something, and that's kind of it.
Fantastic, fantastic. That's some good insights about how's the life of a day trader who is also very engaged with making full use of his time to do other things and to create other values in other areas. So I believe that many of the aspiring day traders will be possibly looking at how they can actually model the way that you handle your workflow. So now let's move on to a little bit about the best practices that you apply in your trading. So what would be a few of those best practices that you think are very crucial for day traders, especially considering that you are a discretionary day trader? So I would suppose that psychology and emotions could become a hurdle for many of such aspiring day traders. Is that the case for you initially?
My man, dude, you're such a pro. I love you. It's a phenomenal question. I think a lot of people are going to get value out of that because the answer is yes. What's going to happen is you're going to spend the first 2 to 3 years studying your face off, and you should. Awesome. After that 3-year mark, you probably won't learn anything brand new. Generally, like you might learn 1 or 2 stock market things that you didn't know, or you might learn a new candle or time. You'll learn very small things, but people always say, always be learning, always be studying. My friends, you can study the market until your face falls off. But you need to study you, right? Introspection. You need to go inward. And for me, that's what I would fully encourage anyone to just do, things that are massively out of your comfort zone. Go to a new religious temple that you've never visited before. Study their practices for a day, right? Read a book that you've never thought you would read before. Get a performance coach, someone who is spiritual or emotional or cerebral or ethereal, and really work with someone who has nothing to do with the stock market at all, right? Not even almost anything. Yoga or meditation or beliefs or journeys or just going back and healing your childhood. Like, it's something you got to go backwards and forwards and internalize your challenges and your strifes, because it's a mental game, man. Success is a mental game. The stock market, again, as you've alluded to, I do the same thing I've been doing for the last I'm not special. I just do this all the time, every day. I'm good at it, but it's not unique or really interesting at all. I make it fun because otherwise it'd be boring, because we do the same thing every day. So I have to make it a little bit exciting, a little bit entertaining. But at the end of the day, man, it's all mindset, like mindset about money, manifestations, fears, hurdles, beliefs. Tomorrow, I have a webinar that I'm doing with some incredible people here in Vegas, and they're working on manifestations. Man, I thought manifestations were a bunch of BS like 2.5 years ago. I thought they were stupid and they're insane. I'm like, this is dumb. But why? Why do I think that? Is that a fear? Is that a belief? Did I learn that somewhere? Let me figure it out. Does it mean I'm going to do it forever? I will, but do I have to? No. You can learn new things. If you want to grow your bank account, grow your mind. And what you mentioned earlier, my friend, is exactly spot on. You will learn to some degree everything you need to know, mostly about trading. I could maybe teach you some new things, but at some level, you got it. Now it's all here, and just continually improving what's between the ears.
I see. So nowadays, when you are doing day trading, do you still have any occasions where you feel your heartbeat or heart rate increases? And is it most of the time is simply a very serene and calm execution and decision-making process?
Yes. So when I do have some rules written down of things I cannot do. So number one is I can't be under the influence of anything when I trade. When I mean under the influence, like, it sounds obvious, but I don't do any kind of psychedelics. I don't smoke weed. I don't smoke cigarettes. I don't drink coffee. I don't have any caffeine. I don't have any stimulants in my body at all. No music, no anything. I'm just trying to be as me in the charts as possible when I day trade. That's the goal. Does it always happen? No. Right? You and your significant other had a fight, or you and your brothers or sisters. Like, if there's something that's changing, in your world. Let's say you got fired, or let's say you got a huge promotion, or let's say something massive shifted in your life, you probably shouldn't trade that day, honestly. So for me, I do really look for times where I'm super stressed out. One of my rules, and this is a dumb rule, but I'm so happy I have it. I say it's dumb because it shouldn't stress me out. But if technology fails on me that day, I don't trade. So what I mean is if my charting software doesn't load, my broker doesn't connect, the internet's down, my computer's not turning on, there's a random update. If I get stressed out on technology, I just don't trade that day because, man, it shouldn't stress me out because it's internet, man. You're clicking a button right now. You have access to everything. It shouldn't stress me out. But if it does, if my internet doesn't work, I get stressed out. I just don't trade. Simple as that. So I do look for things that are throwing me out of balance. And I'm certainly not saying that I always get them right, but I try to have this is what I do. I got a friend, man, who eats the exact same cup of yogurt, the exact same time of the day. Like robotic. Like you got to get to a point where you're just doing the same thing all the time in this world, because this world, if you are in a world that is always changing, you have to find some consistency and some constants in your life.
Yeah, that's very true. And I think that you brought out a very good point is that a lot of times people think that your emotions and the psychology that affects your trading only comes from the trading itself. But actually, a lot of time it could actually be due to whatever you experience outside of trading, which you bring the emotions and the psychology into the trading room itself, and it ends up doing very stupid and silly things like wanting to take revenge or using trading to vent your frustration, and it just never ends up good.
No, you're right, man. It's all external forces. And yeah, trading, I still take a trade where my heart beats fast. And I'm like, that's so dumb. Like, this is the same trade I do every day. But it doesn't matter because it's new. You know, it's exciting. It's a different chart. It's a different day. And your brain doesn't know. And so you have to go repeat the same things. You have to have your mantras. You have to say the same things. You have to have that consistency. And that's what I strive for. So when I do feel really agitated or like fired up or pumped up, I set my trades up, I'll walk away, and I'll strive to do some type of either meditation, yoga practice, or I go run until I throw up. You know,
I see.
And then I come back and try to just reset, refresh, drink a bunch of water, just calm down. And that usually works. I mean, honestly.
Fantastic.
Yeah.
Now, Jerremy, as a summary to whatever that we have chatted about, what would you think are, like, let's say, for example, if you can just pick 3 of the biggest mistakes that new aspiring day traders make, and what would be the ideal way for these aspiring new traders to actually start on the right footing if they want to really pursue day trading as an option to their generating returns on their capital?
Love it. Phenomenal question, man. Again, I want to make sure your listeners know that you are a consummate professional. Number one, they need to know that you're amazing, man. This whole process has been phenomenal. Thank you for this opportunity. And I will answer your question. So when you start day trading, the number one thing they do incorrectly is they do not have any rules for their trading. They just trade, which is insane, because if you have a job that pays you money, you need rules. Simple as that. If I go to most traders, individual people, and go, hey, could you go out and let's pick a random sport, Philip, let's say tennis. Could you go out tomorrow and get paid $3,000 to play tennis? And 99% of people are going to go, no, right? Or bowling or whatever, pick the sport, doesn't matter. Everyone's going to say no. It's like, okay, so you're expecting to do the exact same thing with trading, right? Because you don't have any rules. And number 2, you don't have any system. So you need some type of system where, what do you do every day? Is it a moving average? Is it a gap? Is it a Bollinger Band? Is it RSI? Like, what do you do? Okay, cool. They all work, just not all the time. So do that, whatever that is, and then have some rules. So like I mentioned earlier, I don't trade under the influence of anything, anything at all. And if I'm at night and I have a glass of wine, well, I have to do all of my work before I have any kind of alcohol at all. So same thing. That's a rule though. And I follow it like a mad scientist. If someone, let's say, has a rule that says, I don't trade if I have a fight with my significant other, that would be a rule. What about if you have children, right? I don't personally have any children yet, but if I did or do, I'm not going to do a lot of trading if there's a bunch of wild commotion going on that night, right? Someone pooped the bed and now it's 3 a.m. I didn't get any sleep. I'm not going to trade that day. So start creating some rules that are related to, all right, your lifestyle. So those would be the top 2 things. Come up with some rules and come up with a plan, some type of strategy. And then number 3, give it time. I know you want to make $1 million. I get it, right? Yes, I'm a millionaire. That's really, really cool, but not really, right? I'm not different than anyone else. Anyone can make millions of dollars doing anything. You just have to become a master at it. You have to become a specialist at it. You have to become really, really good at what you're doing. So that aspect of give it time, I know you all want to make millions of dollars by Tuesday. Give it 3 years though, all right? Give it 2 to 3 years. Give it some time. That's the same amount of time that you're going to spend going to any university, any college, getting any degree. If you are a professional athlete, you're going to spend 12 years before you're making any kind of legit money. Okay, any money. Doesn't matter. If you're making millions of dollars, you spent 12 hours almost every single day for 12 years, right? So you think that's any different in trading, right? If you're making $1 million in the next 2 years, you're battling me. I want you to know that. So when you're on the other side of the computer, you're battling me for my money. So bring it, because I'm going to bring it, all right? I'm going to bring my A game. You need to. So that would be my thought, is like, give it some time. And throughout this process, like you mentioned earlier, my friend, reach out to people who have done it that you do like. If you relate to someone, if you like them, if you enjoy what they say, if you enjoy their personality, they are a mentor, they are a guide, they are a teacher, reach out to me. I'd be happy to mentor people. I don't do it for free, but it's okay. That's because I've been doing this for so long. I do have many free options I can send people. They're very, very helpful. But reach out to someone. It doesn't have to be me. It could be you. It could be all the people that you've interviewed. Reach out to somebody and just get their opinion. Work with them for a little bit. See what advice they have. Take their advice. Take some steps in the right direction. Reach out to someone else. Get their information. Start assimilating this amalgamation of material and become the best version of yourself.
Fantastic, fantastic. Hey, Jeremy, it has been a really insightful interview for me, and I'm sure that's the case for the audiences as well. So thanks so much again for your participation in this interview.
Yes, man, my pleasure. Thank you again for having me. And honestly, one of the greatest experiences of my life being here with you. So thank you. You are a phenomenal human being.
So now, for those of you watching this interview, before we end today's trading conversations, I'd like to remind you again that Jerremy has developed a trading class and that you can simply sign up and attend for free. So don't forget to click on the link below this interview video to actually get started to learn how to become the best version of the day trader you can possibly become. So that's it for now, my friends. I'm your host, Philip Teo, and I hope to have you joining us again in the next episode of Trading Conversations.